Hi, and welcome to this week's episode of the CostofCarry podcast. My name is James Chi. Let's get started. How to finance your home renovation. As the window begins to close to access the government's home builder grant, and maybe perhaps it already has, there is still enough time to capitalize if you're looking to build or substantially renovate your home. Given that the requirements are high for renovators, many people might be looking to borrow in order to fund their home renovation. There are a number of finance options you can consider, and you should speak to your mortgage broker about what is the right option for you. So in today's podcast, I'm going to go through a few options that you may consider. Number 1, using your equity. If you've owned your current home or an investment property for a period of time, then you might be able to use some of the equity that you have created over time if, as well, the property has increased in value. Lenders will generally let you borrow up to 80% of the value of the home, which means that if you have enough equity in your home, you can access that. Accessing spare equity is generally an easy process and one that your broker can help you with. There might be some application fees attached and other valuations and interest rate changes, but generally if you decide to access your equity and detail the purpose of your funds if required, this should generally be accepted. Number 2, redraw. If you've been diligently making your repayments and have contributed more than the minimum repayment that's specified on your loan contract, you might be able to use those additional funds to help pay for the renovation. Many loan products have redraw facilities available for borrowers, which means that you can simply withdraw the amount of money over and above the minimum required repayment. This is usually a quick and easy process and you don't need to apply for another loan. However, your repayments will likely be higher as your loan balance will increase if you are going to redraw. Number 3, line of credit. Another option if you already own your property is to get a line of credit. A line of credit is basically like a large credit card, which gives you access to a certain amount of funds that you can use at your discretion. You're not normally only charged on the amount of money that you actually use, so this can be a flexible option. However, this flexibility also likely means that the interest rate attached to it will be higher than a standard home loan. Not all lenders offer a line of credit option, so this may entail or require you to refinance. Number 4, personal loan. If you don't have any equity available to you, that doesn't mean that you are out of options. You can look to get a personal loan, which you can then in turn use to renovate. A personal loan might work if you only need a small amount of money to fund the renovation. However, the fact that it is generally unsecured means that the interest rate will be higher. And lastly, number 5, construction loan. If you are looking at taking on a major structural renovation, you could look to get a construction loan. A construction loan differs slightly to a normal home loan in that it is drawn down in progress payments as the project proceeds, and these progress payments are used to pay the builder in stages, according to the contract. So generally you will need to have a council approved building plan and certified certificate, a fixed price building contract which lists the stages that work will be completed in, and this will all need to be done by a certifying agency and a registered builder. Interest rates on construction loans are normally higher than standard home loans. However, repayments are usually interest only and revert back to a standard principal and interest home loan upon completion. And that concludes this episode of the CostofCarry podcast. Thank you all for tuning in, and I'll see you in the next episode.